low carbon policy in the wake of the worst global economic downturn in 3/4 of a century and continuing global uncertainty and pessimism. Like India, Australia has not been immune to these developments, but has weathered the storm better than most other countries. While currency appreciation is putting parts of our economy, especially manufacturing, under significant pressure, the Australian economy is in good shape and faces the future from a relative position of strength. We're one of the few developed economies to have grown strongly since the global financial crisis. Indeed, our economy is 9% larger today than it was before the crisis. The latest national accounts put annual growth at 4.3%, underlying inflation well within the 2 to 3% target band, unemployment at 5%, and a AAA credit rating. In the longer term, Australia is well positioned to manage its economy by continuing our investments in the drivers of productivity, namely skills, training and infrastructure. The Australian government sees its approach to tackling climate change, which will build industries of the future, as part of this longer-term productivity agenda. In terms of what we're doing, Australia has an unconditional target to reduce our emissions by 5% below their 2000 levels by 2020. To meet Australia's unconditional reduction target for 2020, we will have to reduce our annual emissions by 160 million tonnes in 2020. And we're also committed to reducing emissions to 80% below 2000 levels by 2050, a commitment which will prevent over 17 billion tonnes of carbon pollution from being emitted between now and 2050. In response to the scale of this challenge, we've introduced a Clean Energy Future Package, the centrepiece of which is a carbon price on 60% of Australian sources of emissions. So from the 1st of July this year, about 300 or so of Australia's largest emitters have been required to pay a price of $23 for every tonne of carbon dioxide equivalent that they release into the atmosphere. This list includes some businesses in sectors such as resources, power, industrial processes and waste, amongst others. The carbon price will be fixed for the first 3 years of the scheme, and then from July 2015 it will be set by the market under a cap and trade emissions trading scheme. Our carbon price will be linked to international carbon markets from 2015, and the global carbon market has grown strongly since 2005, rising in value from 11 billion to reach around 176 billion last year. Linking with other markets will give Australia access to credible, low-cost international offsets in developing countries such as India, and by linking with other carbon markets. Australia's emissions trading will contribute to emission reductions in other countries, ensuring that emission reductions occur wherever they can be achieved at lowest costs. All the revenue from the carbon price will be invested in new and existing industries, with generous compensation delivered through the tax and payment system to lower income households to cushion them through the adjustment. These programs can be accessed by both Australian-owned and foreign-owned companies in Australia. Through the carbon price revenue, the Australian government is also providing a $1.2 billion clean technology program to help improve energy efficiency in manufacturing and support research and development in low pollution technologies. With co-contributions from industry, the clean technology program is projected to generate $4 billion worth of investment. And to complement the effect of the carbon price, about $13 billion of revenue will be used to develop our renewable energy technologies, jobs and industries. This will be complemented by the renewable energy target introduced 2 years ago, which requires Australia to purchase 20% of our electricity from renewable sources by 2020. The reason we're going down this path is that the consistent advice from our experts is that a market-based pricing of carbon is the cheapest and most effective means of reducing emissions, and that the longer we delay taking action, the higher the costs of tackling climate change will be. For example, for every dollar of clean energy investment deferred in the power sector in the period 2020, experts estimate another $4.30 would have to be spent after 2020 to compensate for the increased emissions. So the economic imperative for action has become even clearer following Durban last December.